Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Stephen Carroll and I'm joined by Bloomberg's breaking news editor Louise Moon for more. Louise, let's start in the UK with the retailer WH Smith on news of the resignation of its CEO.
Indeed, this is quite a dramatic bit of news this morning. So their CEO has resigned with immediate effect. That is after an independent investigation from Deloitte into an accounting error in North America. So this was previously disclosed. It came to light in April. And at the time, it caused WH Smith to cut its profit outlook in North America, and shares plunged also at the time. So Deloitte then investigated this accounting error and released their findings essentially today. So they've blamed the problem partly on a lack of oversight. And then there was also quite a punchy line saying that the US unit had, in their words, insufficient systems, controls and review procedures. So WH Smith have announced this to market today. They also at the same time set out an even bigger hit to the North America unit than they had previously forecast. So not good news. And the CEO is resigning with immediate effect. Shares only fell modestly on the news, and then they're actually now just slightly ticking up into the green. As analysts are saying, they're essentially finding some positives away from the CEO news. So they're saying that there is still a long way to go to rebuild credibility, but that WH Smith have given some kind of reassurance on the UK market and the rest of the world as well. So that's a bit of a relief. Net debt is lower than expected, and so there is some potential still for it to return to kind of long-term growth, focusing on their travel unit, which is their main unit, and in North America as well.
Okay, so that's a very interesting one to be watching. Let's go to France next. The media group Vivendi's shares down 13% nearly in Paris. What's going on?
Indeed. So the French market regulator has essentially said that Vivendi's majority shareholder, so the billionaire Vincent Bolloré and his company, must make a public offer for Vivendi shares within 6 months. So what's happened is Vivendi broke up last year, and the regulator says that at the time they should have offered to buy out other shareholders. So they already own 30%. They're the majority shareholders, but they should have offered to buy out other shareholders at the time, and saying that they now should make a bid for the shares of what remains of the original company that's still listed. So this kind of falls in favour of an activist investor. They've argued that the breakup kind of gave preferential treatment to Bolloré over minority shareholders, and it all comes down to how much control the company has over decisions due to the structure of Vivendi, of the company. So we'll have to see what happens if this ruling by the regulator could be overturned in appeal, and it's not clear how much he would have to offer shareholders. But as you say, shares are moving on that news this morning. And if this all goes through and shareholders accept the offer, then Vivendi could potentially delist. So we'll be keeping a close eye on what happens with that.
Yeah, indeed, an opinion from the French Advocate General, so one of the legal advisors to the court, being reported by Le Monde newspaper this morning, key part of that share moving story. Let's stay in France, though, and talk about Kering. Warnings it'll have to scale back reliance on Gucci.
Indeed, yeah. This was a report saying, that they would reduce their reliance on Gucci, which is obviously Kering's biggest brand, by kind of, developing other brands and focusing on other ones like Balenciaga. Also saying they would need to scale back their store network and have a rethink about their price positioning as well. And this is all to return to growth. Shares fell on the back of that, the most in nearly 2 weeks. Analysts are saying it's all quite vague. There's no definition of growth targets. There's no kind of hard facts. And the report did note that the actual official strategy plan will be presented next year. So those details potentially to come. But just to take a step back with the wider context, so the CEO joined in June and he was very welcomed by investors. And one of the key things was a revival of Gucci. So that hasn't yet happened. He has made some changes. There's a new boss and vowing to cut costs and other measures. But all of these efforts pointed to a revival, but potentially a bit of a change in tone now, saying that Kering must reduce their reliance on Gucci. So shares not reacting positively on the back of that.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.